Nangineni joined just now, Managing Director with Sobha. Jagadish, good morning. Thank you for joining us. Now, after record 2023, you've registered a 34% pre-sales growth and you're guiding for a 15 to 20% growth. So I'm just trying to understand that you're guiding for a much conservative growth and what you're reporting is a much stronger growth. Is this just a one-off and will things normalize as we move to the third quarter?
Morning, Nikunj. Thank you for having me on your show. The entire sales growth largely is, is dependent on our ability to do launches during the year. And it is last year we have been able to consistently launch, and our average launch was earlier about 2 million square feet, which we could double last year by about 4 million square feet. And those launches were consistently there in all the quarters during the year. So that has really helped us pull up our sales in last year.
What you're saying is that the pre-sales numbers, what you've reported, this is largely because of product launches, and in the second half, things will actually be much lower.
The pre-sales that we have reported were for the last financial year, and the next financial year, FY24, is also the sales will be dependent on our ability to launch. And we have a pipeline of about 14 million square feet of forthcoming projects. And we believe that half of those we can do it next year in the sense in FY24. And even if we do that, then that is also an increase of about 65% from the last year. So we will be able to sort of increase from that.
In the past, we've seen your launch momentum significantly drop in subsequent years after seeing a spike. But this time around, you expect to sustain the launch momentum in FY25 as well. What's driving this kind of confidence?
It's two things, Aisha. One, performance, and second, prudence. First, from a performance point of view, we have consistently doing good sales that has given us a good confidence. And second is our ability to manage our cash flow as well. And you would have seen that last year we reduced our debt, and essentially our net cash flow generation has been 697 crores. Prior year it was about 516 crores. So both these have significantly corrected our financial structure, and that gives us a lot of confidence in investing in future growth. And we hope to sort of take it from here in the new financial structure.
Despite price realizations, though, improving consistently, margins have come under pressure for you of late. What's the factor really that's leading to the same, and when is it that you actually see the margin pressure ease off?
You're right, Aisha. In real estate, the cash flows and sales come first, and the margins show up later. So the margins have been under pressure for past couple of years, mainly due to the cost increases, the inflationary led, which in some of our contractual projects we had taken it upfront. And the price increases and corresponding revenue realization will happen subsequently in FY25, FY26 going forward. So once you start seeing those revenue recognition happening, things should correct.
Outlook when it comes to the demand in the Bangalore real estate market, given that there have been a spate of layoffs, etc., that have taken place. What's your outlook on the Bangalore market in terms of pricing, demand trends?
Bangalore for us seems to be reasonably robust. We have on the ground, when we look at our leading indicators, which is the walk-ins at site, that seems to be fairly stable even in the last 6-12 months and even in the last couple of months too. So although there have been several news regarding these kind of negative news, some of those, but I think it's largely driven. But the Bangalore market as a job market always has a lot of depth. While there has been probably some kind of negative news on some segments, there is always a lot of positive activity on some other segments like captives.
Okay, debt levels as well have come down meaningfully in the past few quarters. Given that now the focus is on new land investments, how do you see debt levels shaping up down the line, and how are you looking to fund these acquisitions as well?
Yeah, you're right. The debt levels have come down close to about 1,400 crores in the last 10 quarters or so. We will continue on that path. Might not be at the same pace, but increasingly we'll allocate more capital to the new land investments. So, and the new land investments are also going to be largely from cash flow that will be accruing from operations. And we are fairly seeing a robust cash flow generation, and that should help us in doing these new investments in new projects.
Right. I also wanted to get a little bit of sense from you because back in March, the IT department carried out a raid at the registered office and other premises of yours as well. Is that matter done and dusted and now resolved?
Well, yes, there was a search operation in the company. Once a search happens, there is a certain process which the income tax department follows, and we are waiting to see what's the outcome of that.
What were the findings? Can you share them with us? Because that had a meaningful impact on your stock when the news, in a sense, had hit the exchanges.
That's right. So we have entirely cooperated with the income tax department, and it was what we have understood from the department is it was in the context of some other search in which some other party has done transactions with us earlier, and in that context they have come to us and several other parties who they have done transactions with. And during the course of the search, they have not found anything which is significant, which is related to those transactions. So otherwise, they have taken all the data, and hopefully, we should see some kind of decision or decisiveness in the coming next few quarters.
I'm just having a follow-up question here. I don't want to get this one wrong. It's important. Was the IT search on Sobha Limited, or was it on some of the subsidiaries of the promoter?
Well, the search has been on Sobha and on our offices. There are no subsidiaries of the promoter.
Back to business, and Avan did refer to the fact that IT layoffs have happened. The zing in the Bangalore market, Jagadish, you would appreciate, is not that great. IT companies are not giving that kind of an pay hike. Startups are not hiring, and sentiment plays a very large role when you're buying a real estate. You think of your cash flows. If you're comfortable with the cash flow planning, you'll commit to a large loan or buy a real estate. Has the sentiment in the Bangalore market turned sour after what has happened in last 12-18 months?
You're absolutely right. Actually, buying a residential real estate is the ultimate bet on your own future, because you're taking debt on yourself, and there is a sense of optimism as how you're going to repay that debt. So, given that on the ground there is definitely no change in terms of the level of interest and the kind of optimism we are seeing in the customers. So, but at the same time, sometimes the sentiment also plays a role. So although we have been also very cautious about it, but on the ground we are yet to see significant changes there.
Okay, Jagdish, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thank you so much.
Okay, let's just bring up the Sobha stock as well.